Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're going to talk about US retail and my guest is Amy Kong, partner at Corient. The S&P Retail Select Sector Index and the ETF that tracks it, XRT, is mostly flat this year. It's been an underperformer for a variety of reasons, despite the surprising resilience of the US consumer in the face of high inflation and borrowing costs. Some of that is down to the index itself, which is equal weighted. Its 77 components include the likes of Walmart as well as Home Depot. Those two retailers themselves tell differing stories. Walmart shoppers help the largest US retailer lift its sales forecasts. Not so for the home improvement retailer. Well, to help us look in a bit more detail at the sector, I'm now joined by Amy Kong, partner at Corient. Amy, thanks so much for joining us. Well, let's look at those two retailers. Why the disparate view in the sector, in your opinion?
I won't comment specifically on the companies, but I think in general, investors are looking for margin improvement, if any, during this earnings season and guidance for 2024. In general, too, in looking at the retail sector, obviously there are two subcomponents of that. There is the staples category as well as discretionary category. And so in general, in looking at what consumers feel about discretionary spending, that has been trending downwards to a degree, just in light of the fact that we've really gone through this momentum of spending post-pandemic. At the same time, I also believe that interest rates and the fact that they are still at the higher levels today, that impacts discretionary spending to a degree, especially larger purchases, larger projects, things of that sort. And so these macro factors, I believe, help explain why there could be discrepancies between various retail companies, as you've noted.
But overall, the sector itself isn't really performing that great. And the US consumer has been pretty confident up until now. So why do you believe the sector isn't really keeping up with the rest of the market?
The sector has been flat, to your point. I think there are a couple of reasons to think through that. First and foremost, the obvious is that the rally we have seen last year and even year to date has been a technology-driven rally. And so clearly this is a subsector of the broader market in the retail space. It just hasn't compared as well as the tech companies that we've seen in general. I think structurally, the index itself is different than the S&P 500. To be specific, the index is an equal weighted index. And what that means is that the components of the index are not necessarily very different in weight versus the S&P 500 is a market cap index, which means that if there's demand for a specific stock or a specific subsector, that starts to grow in weight, and that can obviously drive further momentum. And that's exactly what we've seen in the past 12 months and even on a year-to-date perspective.
And if you're thinking of investing in this sector, should you avoid the smaller names and stick to the large caps?
I think in general, and this is my personal view on the sector, first and foremost, the U.S. is a consumer-led economy, and so it is an important sector to consider in client portfolios. In general, I think the state of the consumer is very important to consider when an investor decides, do I want exposure to this area? And so in general, market dynamics such as the level of interest rates, the level of inflation, if things are feeling more expensive versus a year ago, sometimes that can impact the propensity to spend more. I think consumer sentiment is an important dynamic to consider. Are people earning more today than a year ago? These dynamics, I think, are, again, very, very important in determining the trajectory of retail spending and consumption trends going forward.
So overall, would you tell investors to look at this sector and maybe invest in this sector right now?
As I mentioned, those dynamics are important to consider. Maybe another aspect to also keep in mind is just valuation levels of this sector, which relative to some of the tech companies that we have been seeing in the rally, clearly there could be some value there. But I think, again, in terms of looking at this sector, the entire picture has to be considered. Valuation, whether or not you want income. Some of these staples names may pay higher or above average dividend yields. And again, those dynamics could be important to one client, but not necessarily to another. So again, all of these dynamics will be very important in determining, whether or not there's a need to have exposure to this sector.
Amy Kong from Corient, many thanks for your thoughts. And that is your roundup of US retail stocks. I'm Ramzan Karmali, and this is Reuters.